meme stocks seem to be losing steam after shaking up Wall Street on Monday. The latest round of GameStop fervor kicking up again on an account believed to be tied to investor Keith Gill. He's the guy who ignited the whole meme stock rally back in 2021, revealed that it spent nearly $175 million building a position in the video game retailer using online trading platform E-Trade. Since that post, there's now ongoing discussions at Morgan Stanley's E-Trade to ban Gill's account. That's according to the Wall Street Journal. Now, this raises the question of whether or not more companies need to be on the lookout for how social media is impacting trading. Here to weigh in, we've got Bill Capuzzi. He is CEO of Apex Fintech Solutions. That is a digital wealth management company. Bill, thank you so much for being here with us. I mean, as I mentioned, E-Trade is considering blocking Keith Gill from the platform amid growing concern about stock manipulation. Would you consider the same?
Yeah, look, when I looked at the facts that I can see based upon what Keith has done, really there's no reason to be banning him from their platform. I think it's actually a black eye for Morgan Stanley to take this position, right? It's no different than someone like Warren Buffett putting out sort of 13F filings for Berkshire Hathaway, in that obviously a smaller sense in the case of Keith Gill, but he's basically put out his positions that he owns. He's published them on social media, and it's obviously created some stir in the market. But from an outsider looking in, without seeing all the facts, I don't see anything wrong with what he's done.
And so as we're taking a look at the update that came through yesterday that was posted online, I mean, this comes back to what had taken place in some of the proceedings on Capitol Hill, when there was a lot of fact-finding in the wake and the aftermath of the height of the meme stock frenzy in January of 2021, where then elected officials were trying to figure out, okay, how is it different for someone to go on social media and just post what they might talk about at a backyard barbecue and their holdings and their positionings and what they're invested in, and what their strike dates might look like, all of those things, versus what Wall Street has been known to do and firms have been known to publish for years, and the difference there. Is it any different than what was already found out at that time right now?
Yeah, look, first of all, the environment is incredibly different than it was in 2021, right? Sure. What happened back then, right? Let's just take GameStop. It was called a hard to borrow, right? So there's a big short squeeze, and part of the reason for that was that there weren't a lot of shares to borrow to cover the shorts, all right? And it caused challenges. Number one. Number two was we were settling trades in what was called a T+2 environment. So you settled trades 2 days later. Last week, we moved to T+1, which definitely changed the environment in terms of trading. What it means is that I buy or sell something today, and tomorrow it settles, right? And it creates a better environment for us, right? It creates a lot less risk for the entire street. Specific to his trades, to your point, Brad, it's no different than an institution filing their 13F filings, right? In terms of what he's doing, there is a fine line. It's if they're posting on social media, hey, this is what I'm doing, right? Having the position after, right, and causing manipulation in the stock, that obviously is illegal, right? But from what I see in terms of Keith Gill, I don't see any issue, right? And frankly, we would invite him onto the Apex platform, based upon the facts and circumstances that I see, right? He's expressing his views in terms of what he thinks, in terms of GME, AMC, some of the different meme stocks. I don't see any issue with what he's doing.
Well, Morgan Stanley would say the issue is that, they would likely say that the issue is the call options prior to posting. To what extent do you think that is a valid argument?
I mean, he bought call options. Right. So again, he's expressing his view. What I love is the fact that we've lowered the barriers and allow for retail investors to use things like equities, like options, to, again, express their views. He had bought these options, and he actually took a post and said, hey, I have these options on. Right. There's nothing wrong with that. It's, again, make the analogy to Warren Buffett or to any other institution as to post 13F filings. They're telling you what their positions are. Right. There's nothing wrong with that.
Well, Bill, you said at the beginning of our interview, you called this a potential black eye for Morgan Stanley if they do, in fact, block him from the platform. How likely do you think E-Trade would be to lose other customers if they make that move?
Very likely. All right. So let's go back to 21 and then fast forward to today. which is amazing for our industry, is retail investors have power, right? That we've lowered the barriers, folks like Apex, creating a platform that allows for people with small amounts of money. This is not a rich person's game anymore, and effectively allow these people to access the market. And so my sense is that if they kick him off the platform, for sure there's going to be backlash from Morgan Stanley E-Trade in terms of others saying, hey, this isn't fair. He didn't do anything wrong as far as what we see. Again, I don't have all the facts, but based on what I see, I don't see anything wrong with what Keith Gill is doing.
Bill Capuzzi, who is the Apex Fintech Solutions CEO, joining us here. Bill, great to see you. Thanks for hopping on.
Good to see you. Thank you.